Are you trying to find more information about the Fannie Mae Family Opportunity Mortgage? Well, if so, you're in the right place. My name's Scott Hastings. I'm a mortgage broker. I'm located in Charlotte, North Carolina, and I've helped thousands of families get the perfect mortgage for them. So, what is a family opportunity mortgage? That is where typically someone needs to buy a home for the parents to live in. And they would rather not have to finance it as if it's an investment property. So the thing that happens many times is, let's say you have a child, uh, they live in the same town as you, and they have maybe bad credit or they don't have a job, uh, or for whatever reason. Typically, in the past, you'd have to buy that as an investment property. And that means you have to put at least 20% down, have a higher interest rate, et cetera, et cetera. Well, with the family opportunity mortgage, it allows you as the child who's buying a home for your parent who is going to be living in the same town as you with a minimum down payment of 5%. And most importantly, it allows you to finance it and get the same interest rate as if you were buying a primary residence for yourself. So why is that important? Well, early last year, there was a big change in the way Fannie Mae and Freddie Mac priced their loans for investment properties and second homes. So it used to be that you could buy a second home, and all this video is not about second homes. It used to be that you could buy a second home and you could put 10% down, and you basically have the same interest rate as if you were buying a primary residence. Well, Fannie Mae and Freddie Mac don't really want to be in the business of financing second homes and investment properties. So last year, they greatly increased the interest rates on those. So if you're in the market for actually an investment property right now or a second home, you'll notice that the rates are a lot higher than if you're buying a primary residence. So back to the original topic of the family opportunity mortgage, that's why it's important. You can pay the exact same interest rate and have the exact same down payment as if you were buying a home for yourself, but instead your parents are going to live in it. So the next question a lot of people have is, do the parents have to be on the mortgage? The parents do not have to be on the mortgage. Typically, you would only need to show something like a Social Security statement, sometimes just a letter of explanation as to why the parent can't afford it. But I've never had any problem in the past with this. It's really not an issue. Now, the key thing is that you're not able to bring any of your parents' income into the mortgage. You have to qualify for this mortgage with the money that you make. So you would have, if you have a home, obviously for yourself, you live in, you have a mortgage, you have car payment, you have credit card payments, et cetera. Well, you're going to have to be able to add this additional mortgage on the property that you're buying for your parents into that and still qualify. And just a little bit of mortgage 101, with excellent credit, you can typically get close to 50% of your before tax income to go towards all debt. So, I wouldn't count on that, but that's about, the very max. It can't get any higher than that. Also, it's not only for a parent, although that's mostly what I've done these for. Also, if you have, say, a disabled child or somebody that cannot qualify for themselves due to extenuating circumstance like that, then they might be a candidate, for this type of mortgage. So hope that's helpful. If you have any questions, please put them in the comments below. If you found this video helpful, it would be super helpful for me if you would click like and subscribe. And then when another video comes out that I put out, then you'll be notified about that. All right. Thanks for watching. If you'd like to get qualified for a mortgage, go to my website, mortgagesbyscott.com.